Hey everyone, what is up? I'm Crypto Herc and we are here with Jay. Hey man, how are you?
Hello, Mr. Crypto Herc.
Ooh, all good?
Good, very good. How about yourself?
Yeah, all good, all good. And we have a very interesting live stream today. We are going to talk about the second certainty of life. The first is death. The second is taxes. And we have a lot of people, a lot of members of our community that are asking about crypto taxes in the US. So we are going to talk about it. Before that, just to let you guys know that we are celebrating the 200,000 followers of CryptoBirb. We have a 14-day free access to our community. So you will see, you can find all the information in the description of the video. And also we are giving a nice giveaway, and you can find the link as well in the description, and we are going to give you the secret code during this webinar. Before we introduce you to our special guests for today, let's hear some words from our partners.
PrimeXBT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on PrimeXBT in minutes.
Birb Network is an interoperable DeFi ecosystem offering token pre-sales, staking as a service, project incubation, and much more. Visit thebirbnest.com/Ferrum. Globe is an upcoming crypto derivatives exchange offering up to 100 times leverage on crypto and DeFi perpetual contracts. Sign up for early rewards at thebirbnest.com/Globe. Radix is the first Layer 1 protocol built specifically to serve DeFi. More information at thebirbnest.com/Radix. YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirbnest.com/YFDAI.
Okay, perfect. So we are back, and at this point, I would like to introduce you to Alex from.
Hey guys.
Hey man, from Accointing. I find it very hard to say it because I usually say accounting, but it's Accointing.
You know, funnily enough, I now have the problem of the other way around. I can't say accounting now because I always say accounting.
Yeah, that's funny. And the second special guest that we have is Clayton from Crypto Tax Audit, and he is a partner of accounting for taxes in US. Welcome, Clinton.
It's a pleasure to be here, Herc.
How are you guys? All good?
All good, all good. Can't complain.
Good stuff. So as I said, we are going to talk about taxes, right? A lot of people ask about how they can file their crypto taxes, and it gets, especially with all the products now that we have in crypto, DeFi, and we have farming, and we have traders, and we have, I don't know, what have you got? It gets more complex day by day, month by month, right? And people are, it gets to the point where it's the end of the tax year, and they have no idea what they should do, and they spend countless hours writing down numbers, and even still they are not sure if they have done things correctly. Am I right, Clinton?
Oh, absolutely. It's overwhelming for most people. I mean, I've tried to do crypto capital gains myself, and by the time I've hit the 10th trade, my spreadsheet's already blown a cell. So it's extremely complicated just to calculate the gains. Then the IRS in the US has provided very little guidance on how to input the taxes. The tax companies out there haven't, like TurboTax, Tax Act, H&R Block, they provide little guidance. It's challenging, definitely.
So what do you think are the main pain points for someone in the US to file their taxes?
The main pain point is calculating the crypto capital gains. And Accointing is an excellent tool to help people do that. We use them professionally inside our company because they have a very systematic approach to resolving the problems that you have when you reconcile your gains. The second point is then to, how do I add this into my tax return? And there's this is really a very sad thing. In the United States, TurboTax, Tax Act, and H&R Block have really stepped away from the crypto community. They don't really want to support them in preparing tax returns because they feel there's a very high likelihood of errors with crypto returns, and it's going to cause them problems with their 100% accuracy guarantees. On top of that, if you go and say, I'll just get an accountant to do it, your average accountant who's not a CPA is not going to know much about how to file taxes. And I presented to the American Society for the CPAs, AICPA, and I made the statement that 95% of CPAs wanted nothing to do with cryptocurrencies. And I was told by the other CPAs that, well, it's probably higher than that. They don't want anything to do with cryptocurrencies. Even the ones that say they know something about cryptocurrencies, probably, just to your point, Herc, they really don't understand the complexities of what's happening today. They don't understand DeFi. They don't understand these complex things that are happening. So it's really sad in the United States and for the average taxpayer to figure out how to prepare a tax return that'll let them sleep well at night.
And it's really painful when you cannot find an accountant that is specialized in crypto, and especially when they are not getting out of their comfort zone to understand what crypto is, right? And of course, that, on a side note, that is in your benefit as well, because you are specialized in crypto. So crypto is an emerging market, and it can only get bigger. So I guess many accountants will join late.
I would hope so. But you're touching on a very interesting point. When you think that 60% of the millennials, people under 38, are own cryptocurrency, and most of them have never invested before. And once they run up with these two major hurdles of how do I calculate my gains and how do I report them and get somebody to help me do it, we're having a big problem in the United States with a whole generation of people saying, I'm not going to report my cryptocurrencies. I'm too afraid. I know my accountant's going to do it wrong. And then you get into this really terrible trap where I didn't report my crypto. I didn't even file a tax return or report my cryptos last year. And now it's this year. Do I report them now? Because then they'll find me last year. And you get into this downward spiral of fear. And then you don't report this year. You don't report next year. And then you don't know how to get out of this hole. And this hole is a tragedy that I think really, I would not be surprised if 25% of millennials are in this hole of non-filing. People call me up all the time and say, I'm making money this year. I'd like to fix the last couple of year tax returns. And they're scared. It's really, when I say people aren't filing, I'm basically saying we're creating a generation of tax evaders by accident and by neglect. And it's really sad.
Well, and barely any information being there, right? Or being difficult to access information, right?
Oh yeah, I mean, you're creating a generation of people that are hiding and are afraid, and they just retreat further into the anonymity that crypto investing offers. But their fear doesn't go away; it just merely compounds. And I mean, I talk to people all the time that they never filed for the last couple of years, and now they want to. And it's scary. So, but great point you brought. You alluded to her because I wanted to develop that.
Yeah, and it's just before I ask you a question, just to say to the people that are watching that they can ask any questions they want in the chat. We are happy. I guess you are happy to answer them. But what I was thinking is that right now, governments in general, I personally, I'm based in the UK. So governments at the moment, they are not so organized. They cannot, maybe some governments, they cannot track efficiently your wealth, but it's true that blockchain is out there. it's in public. Everyone can see, the addresses. So at any point, a government in the future, where they might have developed the right technology, tracking technology, they might be able to see in the future that you haven't filed your taxes like 3 years ago, 5 years ago. So they might, I don't know if that's a case in the US, in the UK it is, but they might get back to you and say, hey, Clydon, what did you do? I know what you didn't do last summer or 5 summers ago, right? You haven't filed your taxes. So, and then you are trapped, and then you will have to spend countless hours and pay much more an accountant to file your taxes. Am I correct?
Well, yes, you're right. Every day when we file something to the IRS or to the government, we're leaving behind digital fingerprints. We're leaving digital fingerprints on the blockchain at exchanges that we use, and these can come back to haunt us. I mean, even right now, the IRS is suing Kraken and Poloniex/Circle to get their transaction records for U.S. taxpayers going back to 2017. I mean, 2017, that's 4 years ago. They're really, and a lot of us have very few records of what happened in 2017. The IRS is going to pull this information out. And just like you said, we were exposed. Not only will they hit you with the amount of tax you owed, and then they're going to hit you with a 20 to 40% accuracy penalty, and then they're going to hit you with interest. And interest is going to get up between 40 to 50% by that point. So it's very complicated.
To that point, do you think the IRS will actually go after the little guys too, like people with, say, less than $50,000 to $100,000 in crypto?
I think it's possible, Jay, and it depends upon their trading behavior and whether or not they reported things. The biggest issue people have had that causes them to get audited. In my company, we are probably the largest boutique company defending people in crypto audits. We have 19 people being defended. If you fail to report what's called a 1099-K, which is a tax document that is filed at the beginning of the year for the prior year by, say, an exchange, if you don't account for that in your tax return, then the IRS computers say, hey, we saw you had this 1099-K from Coinbase. You didn't mention anything about it in your tax return. We're going to send you an audit. So this is the biggest mistake you have. The problem people wrestle with this sort of notification process, the 1099-K, is that it only reports the proceeds amounts. So, and however much you deposited into the account. So it doesn't reflect the cost, okay? So imagine somebody who has let's say you have $3,000 in Coinbase. And they're doing some sort of trend trading or whatever. They're in, they're out, they're in, they're out. Every time they traded that $3,000, it's another $3,000 that's being racked up. So they do that 10 times. You got $30,000 that Coinbase is going to report to the IRS. Well, he never had $30,000 ever. I mean, he had $3,000, and so, and I have clients who the IRS thinks they had $3 million in gains in Coinbase at 2018, but we did the calculation with the cost basis, and we did it on Accointing. We were actually able to show that the guy actually lost $17,000. He deserves a refund. So this is really problematic. The data is problematic for the IRS. It's hard for them to interpret it, and little guys are getting burned. It's really challenging for everyone.
And I remember reading an article that was saying that in a few years, half of the billionaires will be crypto billionaires. I'm not saying, the big fish, the small fish. And I see a comment from a friend here. They already do this, obviously, in Romania for as little as $150. Right now, it's based on goodwill reporting, but we know how that goes. So this actually emphasizes my point where, in the future, the governments might develop a technology where they get the data easily. So even for small fishes, they can send an audit and say, we see that you have generated this amount of profit. What's happening? And you haven't declared it. So I think it's very important for people to start making their plans and be typical with their taxes when it comes to crypto. Yeah, let me see if we have any other questions. So in this case, how accounting can help?
Yes. So essentially, what we've specialized on, or the reason why we essentially built our platform, is that we had the problem that we couldn't account for all of our trades and transactions, right? And so what we then decided was we checked out some of the tools that were out there. There was a few different tracking tools. Everyone knows the big ones like Blockfolio, for example. And there was a few barely any tax tools, but a few like coin tracking, for example. And we went and said, hey, the fact that you have to use 2 different tools to track or do taxes is a bit unnecessary, right? And secondly, we really wanted to hone on the aspect of having really, really accurate calculations, right? And so what we've done essentially is we want to make sure that everyone can import all of their transactions. This is kind of what we were talking about before, right? You might trade on Binance, on Coinbase, and then you might do trading on Uniswap, or you might lend, or whatever it is. And so we want to make sure that it's as easy as possible to actually import all of those transactions. And Accointing then does the calculations of the capital gains and everything. There is a note to be made, though, that obviously crypto's still relatively new, right? I feel like people that have been in crypto feel like it's already here, right? But data infrastructure wise, it's still pretty fresh. Exchanges obviously don't focus on kind of accounting and everything. They focus more on making money and trading fees and everything. And so data infrastructure really is not great. And so there is manual work to be done. But that's kind of what we're trying to do. We're trying to create a place where it's as easy as possible to really put all of your portfolio transactions and everything together so that you can understand what your portfolio is doing. And at the same time, when it's tax season, that you can print a report. And we focused on the tech and kind of focus on partnering with companies just like Clinton's crypto tax audit, because they have the knowledge of the accounting, right? And obviously there's also situations, and I'm sure Clinton will speak about this, where, you know, rules aren't very clear, right? Like for example, if you're farming, the IRS has not given out rules on how to tax that, or what you should do, or how to report that. And so that's what we help with in terms of kind of bringing the whole picture together, and of course, so that you can track your portfolio as well, and then do your taxes.
Makes sense. Yeah, Jay.
Yeah. So, and then once you have all of your exchanges and wallets connected, are you able to track that data now in real time, or after it's happened, and see what's going on in your different wallets and exchanges, and even like look at your gains and losses through the Accointing as well?
Exactly. So that's the whole point. Obviously, so not all exchanges have great APIs, which is the direct integration, right? Which is automatic importing and everything. For the ones that we do, so most of the big exchanges, essentially, you can exactly just every day you will have all of your transactions in Accointing. We also connect to the blockchain, so we import the transactions that are happening on Ethereum, on Bitcoin, on Polkadot, for example. But of course, as we all know, there's so many different chains and so many different exchanges. Not all of them are being able to be imported automatically.
So in this case, first of all, the best thing with the platform is that you support any kind of transaction. So is it a MetaMask wallet, or if it is an investment opportunity like an ICO, you support everything, right?
Exactly.
The other point, of course, is that you have dedicated partners like Clayton's company, where if there is a change in legislation, you add this in your roadmap, and in a very short time you adjust your platform to support the new legislation, the new rules, let's say.
So that's one way that we work together, and then the other way that we work together is, of course, that Clinton helps our clients in order to do their taxes, right? People that either have a very complicated case, or B, people that just need help with their taxes or want to look over, because obviously there is a lot of things that can kind of go wrong, and it's always good to have an accountant to kind of look over one's shoulder.
Yeah, definitely. And then just for people's information, you support which countries, dedicated countries that you...
So the dedicated countries that we support, where we have a dedicated report, is the US, the UK, Germany, Switzerland, Austria. We're adding more countries. We also have an other countries report, where essentially as long as the country that you live in use FIFO, HIFO, or LIFO, you can essentially use Accointing.
Okay, perfect. And we have one very good question. Probably is for Clinton. So Duke says, does margin trading in the US make taxes more complicated?
Well, margin trading is basically borrowing money to do your buying and selling. From a tax reporting point of view, that's not complicated. But from a tax calculation point of view, on the accounting side, it can be complicated, especially when you're in a situation where you're selling something before you've bought it. I'll throw that half of that question back over to Alex to answer.
Yeah, exactly. So essentially, a margin trade can be integrated in Accointing. Either it gets pulled automatically, depending on which exchange that you're using, or you can put it in manually, where you essentially report either the gain or the loss, and then the capital gain can properly be calculated there.
Got it. Perfect. And just to let our audience know that today's giveaway is 3 accounts, pro plan accounts for free. So the total worth is $900. So it's a giveaway that people can get from the description we have on our YouTube channel. Clinton, one question for you. Are there any rules? For example, as I mentioned, I'm based in the UK, and I assume that the complexity in crypto is not like Forex, where you have, let's say, you buy specific pairs. So let's say US dollar against the British pound. You also have dollar to Bitcoin to other cryptocurrencies. So that makes things more complex, right? Because you buy a pair, let's say Dodge Bitcoin, and then you sell it with a profit. So how this is translated in US, based on the US rules?
Well, on a US tax return, everything has to be expressed in terms of the functional currency, which is US dollars. Every transaction. So even though it's you're trading a pair, we're looking at what's the price of that pair at this particular moment. What's Bitcoin going for this at this moment when you've sold it for dot, that sort of thing. So everything's translated into US dollars. And this one of the big challenges that people have for initial investors, this is a recurring question, so I'll just answer it up front. Under US tax law, every time you trade a cryptocurrency, you experience a gain or loss. And that has to be reported on your tax return. All the gains and losses they're added up against each other, and the net gain or loss is what you pay taxes on at the end of the year. There's a couple distinctions I want to bring out in that description. One is, a lot of people think they're only paying taxes when they convert to cash. No. Every time you convert, if you go from Bitcoin to Polkadot, you go to Link, every time you do that, it's a taxable event or loss. It's gain or loss on the transaction, and it gets reported. In the US, if you hold something over a year before you trade it, then you get the benefit from a lower tax rate, which is 15% for most people, rather than short term, which is your ordinary tax bracket that you're in, which is your what the progressive tax brackets, 22, 24, 32, etc. So these are two big distinctions. One of the topics that a lot of people are talking about right now is the topic of airdrops. This is very hot, especially for the XRP community and the Spark token airdrops, which are going to happen in the next month or so. They're saying, I'm going to get these tokens. Am I going to owe taxes on it right away? I could be overwhelmed by the taxes. And it's a great question. And it's not just this token, but it's going to be a lot of other tokens in the future. This question about airdrops. Under US tax law, an airdrop is taxed at its as ordinary income at the fair market value in US dollars on the day that you receive it, assuming you have full control over it. Now, in a situation like the Spark airdrop, there's no known price for this. The Ripple company didn't come out and say, this coin's worth such and such. They're just saying we're giving them out. So the first day when everybody receives their first coins, everybody receives them all at once. What's the fair market value? Well, there's never been a single Spark that's been sold or bought on that date. Therefore, there is no fair market value. It has to be zero. Now, a month later, when we have the second airdrop from Spark, at that point in time, I think we'll see some price stabilization, what people are willing to buy and sell a Spark token for. And at that point in time, then that token would be treated as income at the price, fair market price on the day you get it. And any gain or loss is taxed as capital gain thereafter.
Do you think that using an accounting program like this for crypto can help people to more easily prepare for tax time just by knowing kind of where you're at in terms of capital gains and like what you're going to owe on your taxes? Because I think it's one of the things that people are anxious about is not knowing what the heck they're going to owe when tax time comes. And people are scared about owing a whole bunch of money. So I think, something like this could help in that case, right?
Well, absolutely. There's no way to calculate your crypto gain tax without using a tool like Accointing. And Accointing is a very strong tool in this ability. And one of the things we're doing for customers this year, because just like you said, Jay, everyone's worried, as much as they're worried about getting their taxes done for last year, they're worried about this year and how much money they got to set aside to pay the taxes on the gains that they hope to make. And that raises some real challenges. How do I know what my gains are? Well, one of the really nice features of the Accointing product is something called holding periods, where it creates a slider. It's kind of like you can slide on the timeline. You can say, at what point in time does my Polkadot become long-term? And then I can sell them for, less taxes. And so you can slide it along and you can say, right here on November 24th, that's when they become long-term and I can sell them. Or, when can I sell things? So this is a really powerful tool to help you strategize when you want to sell and how much you're going to make and how much your gain is. And it also will tell you what your gain will be. And that way, if it's short term, you can set aside, more or less 25%. If it's long term, you'd set aside 15%, more or less, and you could plan on that. You take that money and set it aside in USDC so you can have it for the next end of the year to pay taxes.
That's really cool.
Sorry,
I
just to
haven't seen
hop
that
in
feature
here
before.
quick. I think tax planning is like a big thing, right? Especially with crypto, where I think that a lot of people are underestimating the aspect of being able to optimize your taxes. And that's obviously because people just don't know what that means or how that works, right? And so I think the aspect of the holding period, for example, is one thing, but the other thing is also, of course, time-wise, because we've seen a lot of people that kind of last minute try to import everything. And as said, sadly, there is this aspect of data structure of crypto exchanges not being great. So there is work to be done. And so if you can kind of get it done once before and just kind of update and make sure that it's right, it's much easier once that time comes to work with an accountant or to file your taxes to have everything rather than to kind of stress last minute. Plus, you also get the aspect of being able to optimize the taxes.
Got it.
Yeah. Sorry to interrupt you there, Alex. But yeah, you're right. The infrastructure is terrible, especially with exchanges. Personally, I've avoided certain exchanges because they'll only let you import like 3 months of transactions at most. So because of that, because I knew it would make the taxes so difficult, I actually have avoided certain exchanges.
Yep. Yeah.
Smart move.
We recommend that.
I'll tell you, in an audit, the blockchain is not your friend.
Yeah,
Very
well,
true.
Wish was written on the blockchain is not there. You know, what the
not yet, at least.
Yeah. So the blockchain is not your friend. And I completely agree with you, Jay. I think more people should vote with their feet and walk away from exchanges that have lousy record keeping. I mean, record keeping is the Achilles heel of the crypto industry. And their bad record keeping becomes your liability if you get into an audit. And you're very exposed, and the lack of records in DeFi is a tax, quagmire, because they take all the DeFi exchanges, take the position that everything you need to know is on the blockchain. It's not. It doesn't tell you what your cost basis was. The blockchain is an inadequate tool for characterizing, when you've had completed transactions, completed investments in a liquidity pool or a yield farm or other sorts of derivative structures. The blockchain is not your friend. It doesn't tell the whole story. It doesn't correlate it. It doesn't put meaning into it, and it becomes a really disastrous look. From my point of view, from an audit perspective, when I look at, if I were a good auditor, should be able to rip any crypto tax return apart, because they're just so vulnerable for the lack of documentation. I think more and more people should just have an uproar at exchanges that just accept no responsibility. There's no reason why an exchange like Uniswap shouldn't keep transaction records. Now, the reason is because it's decentralized. Who's keeping them? Who's tracking them? But that doesn't mean you can't instrument it to have like some other vehicle where it puts more intelligent records than just simply the blockchain. I don't know. My 2 cents worth.
So with that in mind, would you like to provide some information on the basics of crypto taxes in the US? So, for example, like ICOs, like farming, and we have also a question from a friend that asks, if the IRS doesn't have clear-cut rules for taxing farming, what do we do? So, it would be useful to understand, the different types in crypto revenue. Let's say, and what are the basics and what are the caveats that people need to be careful?
So that's a very good question. The U.S. tax system is structured around when do you realize income, whether it's paid to you as a wage, an interest, a dividend, or gain from having sold something. This is how the U.S. tax system is structured. Cryptocurrencies, in particular, are considered property. And property is taxed when you make a gain from selling it. So you need to be able to go back and figure out what the purchase price is, which is subject to a lot of questions in terms of how do you decide what it is. And that's where a product like Accointing comes in, because it gives you the tools to make the choices you can get you the best tax advantages. In terms of taxation, any sort of reward, whether it's an airdrop or reward from staking, or let's say you're farming and you create a coin. All these forms of creation and a receipt of income are taxed as ordinary income at the fair market value in US dollars on the day you receive it. Now, ordinary income means it's just taxed at your tax brackets, which in the US and like most other countries are progressively get higher and higher as you make more, okay? And that tax bracket is the marginal amount, the amount the next dollar of income is taxed. We have special tax rates for long-term capital gains. Now, when you get into situations like liquidity pools in DeFi, now you're getting into some areas where the tax laws really are inadequate at this point to characterize those sorts of financial situations. And we've already had problems with like this in the handling of derivatives for stocks themselves, futures trading for commodities and bonds. But the laws in the US are written specifically to these markets. The laws typically say in a regulated exchange, the trade of this and that is blah, blah, blah. Well, no crypto market is a regulated exchange in the US, so none of these tax laws apply to it. So you have a very up in the air market. One of the challenges with DeFi is, okay, I put some coins. Let's say I put some link into a liquidity pool, and then I get a liquidity pool token. We'll call it A-Link, which reflects how much I put in. And then I can take the A-Link and I could trade it, I could invest it, I could do some other things. But a lot of people might treat that as a trade, that actually traded my link for my A-Link, and then I gave up my link in order to get the A-Link. But that's not the case. It's more like I put my link in the staking pool. That's still my link, but I got like a receipt. It's kind of like a coat check when I drop my coat off at the theater or something like that. I come back later, I want to get my coat back, right? And I should not experience any loss of the holding period, which is a big tax benefit, because I put my coins in staking, because of how I calculated it. So there's some questions in the tax code. There's questions in the calculation tool. How do I treat that sort of situation? How do I treat a situation? Another example of one of the weaknesses in the tax code is rebasing tokens. Tokens that are focused on staying within a certain price range, and as a result of if the price gets too high, they'll go into your wallet and reduce your quantity down so that your net investment stays the same. Well, the tax code has no way to really reflect that. All of a sudden you have a loss of coins. Well, something got sold. Not really. I mean, it changed quantities. Is what I got sold, did my coins get sold, or did the overall contract, the rebasing contract, do something inside itself that hasn't affected me? There's a lot of gray areas in terms of basic taxation. But in terms of regular taxation for the average trader, we're all looking at gains and losses, rewards. That much is pretty clear at this point. Airdrops are a big area question, but I've already covered that. So I think that covers most of your major topics.
Got it. And thank you for the information. And I guess one point here, and that's like a confirmation that I need from you, Clinton or Alex, is that one advice I would personally give is keep your income streams, let's say, separate. So let's say I have an account on Binance for my trading. I have for my ICOs a different wallet, or I have, let's say, if I work for a company that I get paid in crypto, I have another wallet for that. So I keep the streams separate. So when I use a tool like Accointing, I have the flexibility to understand what's happening and where, instead of having all the transactions into one wallet.
That is very good advice. I second that.
Agreed. Agreed.
I will tell you, I will give you my number one tool that you can do as a trader to protect yourself in an audit, no matter what you're doing.
Okay.
And it is very low tech, and it has significant weight. If you have to go to court or even with auditors, it is significant weight. This is really low tech. You have to have a piece of paper, a spiral notebook, and a pen. And you need to, every time you do something, it's like, on May 10th, I sold, 1 Bitcoin and bought a gazillion Polkadot, and state roughly what the dollar amounts are. You don't have to, don't do a spreadsheet. Don't do this online. It's very, very important that it be on paper. It involve your pen. It may be a different pen every day. And your handwriting changes on a day-to-day. This is called a contemporaneous log in the law. And when it's written contemporaneously, then the courts say this is actually your note of what happened at the time. It's not a reconstruction a month later or a year later. And when you do this sort of thing on a spreadsheet, you lose that contemporaneous authenticity of a handwritten note where my penmanship changes each day. My pen changes each day. This log is powerful. And especially when you're doing DeFi, when we're into some very complex things, the blockchain really can't explain after the fact what happened. A contemporaneous law written at the time that it happened is super powerful in the courts. The courts will trust that. But and I know it's low tech, and you write this log, and at the end of the year, you file it. Now, here's another thing you do. I want you to write down every single blockchain address that you have. The blockchains that you have on exchanges, the blockchains that you have or your addresses you have on ledgers, hardware wallets, soft wallets, everything. Write them all down. I have a client who's being audited who played with wallets. He would play with a wallet. He'd move some coins in and out to see how it worked, and they'd throw them away, and he'd go play with another wallet. The auditors said, you can't prove to me you own those wallet addresses. We're going to treat all those transactions as income, and you have to pay taxes on it. So imagine this. I mean, he move a coin in, he would take a coin out. He move it back in, out, in, out, in, out. Every time he moved it in, they're going to treat that as income to him. So he can't prove that he actually owned that was his money. He can't prove it. The blockchain is not his friend. So what everybody should do is when you first get this journal is write down all your blockchain addresses. And then at the end of the year, do an inventory, like your December 31st, celebrate your victories. Make an inventory, the total number of coins you have everywhere on all your wallets, exchanges, and what type of coins they are. So you have a proof that this is how much I had. So if the IRS claims that you had more, you can say, no, I had it. I have a proof. I have written record. So this is a powerful, powerful, low-tech tool that the courts will accept.
Well, I didn't know that you know, having notes, writing notes down is so trustworthy to the court. But yeah, that's very good advice.
So you would recommend writing down physically all of your holdings, like say at the end of every tax year, or even more often than that?
As often as you want, but definitely at the end of the tax year, maybe even at the beginning of the tax year, you start this journal, just write a log. This is what as of today, this is what I have. Because you have a challenge when you use a crypto capital gains tool like Accointing or any of the other ones. We have a problem of missing records, and it manifests its way in two major forms. One is called one manifests where I've sold a coin that I have no record of buying. We call this zero cost basis, or negative assets. So in that case, we simply recreate what price you got that coin at, and all the tax records look fine. The second problem is the missing sale record. So what happens is I know I purchased the coin, but I sold it at some point, but I have no record of selling it. Maybe that exchange closed down, I didn't get the records, whatever. So over time, unless you address this problem, your inventory, as displayed in one of the capital gains tools like coin tracking, coin tracker, Accointing, over time it's going to be inflated over what reality is. Not a problem from a tax point of view initially, because we're accounting for all the sales that you know about, all the sales that the IRS will ever discover, but your inventory of coins is becoming distorted, and you need to reset that by doing a new baseline each year, saying this is my total holdings, and reset this. You do it with a checkbook, you reconcile it, but this problem continues to grow if you're a regular capital gains user.
It's excellent advice. We have another question here. What else can we do to protect ourselves from an audit?
Well, what we do from our audit is we offer a service, a crypto tax audit, called it's a membership service worth like $35 a month. We monitor your IRS account on a weekly basis, and we can see when one of your tax returns has been flagged by the IRS for an audit. When that happens, we let you know about it right away. And typically there's 6 months between when the IRS flags a return for an audit and when an auditor actually starts the audit. That gives you time to, at that point, spend the money, fix the return, get it correct, refile it before the audit begins, and you avoid the 20 to 40% accuracy penalty. At the same time, we throw in our bulletproof methodology. We throw in a disclosure statement, the anti-money laundering forms, the extra mile to make sure that the return is as defendable as possible from the IRS. So this is a service we use. A lot of our clients are saying, okay, let's just do this year's taxes. This year's tax is correct, and I'll use the crypto tax audit monitoring service to watch the prior years and then only act when I have to. I know the IRS is starting to get curious. So that's our membership service. And our second level service, on top of that, is we'll actually do the tax audit. If you get audited, it's all prepaid, kind of like an insurance policy. So
that sounds like a very nice service, actually, if you have this.
There's no other service in the world like this. I mean,
I haven't heard of it.
Yeah, I mean, imagine I mean, usually you have to wait for this evil letter to show up in your mailbox, from the IRS, when it just crushes you, oh my gosh. But now we actually know 6 months in advance. You think about it, no general would go to war without the radar telling him where the enemy troops were before he started, right? And so now with this tool, you can actually go on, you can actually have a defense. And there's no other tool like this in the US. And the reason we have that is because we've married several tools together to create this unique offering. And it's really not just crypto only. It's non-crypto as well as crypto equally. So whatever the cause, it's a great service.
Awesome. I have a question from a member, from a friend. I have no idea what he means. What are the forms like 1040, 1099K, and 1099 MISC?
So these are some of the popular forms that the IRS, these are the names of the forms that the IRS uses, and you drop them like everybody knows what they are, except if you're in a foreign country or if you've never done your taxes before. But the form 1040 is the number of the form that you file to report your personal income tax, all your taxes. Then in the US, we use a system of informational reports that companies have to file with the IRS at the end of the year, reporting amounts that they have paid to people. We talked about the 1099K that Coinbase and some of the other exchanges file, and they let you know about it, and then they also tell the IRS. And so what we do with Crypto Tax Audit is we actually look at how much money is reported to the IRS, and then we compare it to how much you filed in your tax return to let you know if there's possible, you didn't report everything. And this happened a lot to people with Coinbase 1099's Ks from 2018.
Got it. And another question that I think Jay might be interested. Do you assist Canadians?
Well, unfortunately, no. It's bad enough I got the entire U.S. tax law in my head that we had another one. And revenue, I will say this. I have lived in Canada a little bit, and I have a lot of Canadian friends, and it might surprise Americans, but Revenue Canada, which is what they call it, Revenue Canada, is a little more menacing than the IRS. Am I right, Jay?
I think you are.
Their saying in Canada is that you're more likely to spend more time in jail for tax evasion than you would for murder. That's kind of what the Revenue Canada is about. Much more quick to seize assets. The tax return, the Canadian tax return, I think, is a little bit more complicated than the U.S. one, although there's a lot of similarities. But yeah, Canadians are in a tough position. Sorry, I can't help you myself, but Accointing can.
Of course. And if I don't manage, another question from a friend, if I don't manage to submit my taxes by May the 17th, what can I do?
This is a great question. Taxes are due in the U.S. on April 15th because of a set of problems, and COVID included. It was extended to May 17th, which is 1 week. You can go to the IRS. You can say, I want to file an extension. Just type in on Google search, say IRS file extension, and it'll take you to a series of websites of software companies that'll let you file an extension for free. An extension is an extension of your filing date until October 15th. You get another 6 months, or in this case, 5 months to file your return. The taxes themselves, however, are still, in a sense, due back on May 17th. And being late results in a kind of an interest rate of about 1% a month, a little bit less than that for being late. But it's better to be accurate than to and pay a little bit more than to be inaccurate and pay the wrong amount.
Of course, and taking this question now, how much would it cost me to do this whole thing with you guys? You mentioned already the service that you have for $35 per month, and of course, if they have to use, it would be good to use accounting for having the analysis of their taxes. And we have a giveaway, 3 Pro Plans accounts. You can find in the description the giveaway, the link to the giveaway, and we share the secret code. With that being said, I don't know if Clinton, you want to add something?
Yeah, I would. Most people should try to learn to do their own taxes. Honestly, it really is educational if you've never done it before. You'll be paying taxes the rest of your life. There's no time like now to learn. And our transcript members at Crypto Tax Audit get access to a course that's free that teaches you how to file a crypto tax return, how to do your own crypto tax return. It shows you how to file your W-2s, your 1099s, these are tax documents, and as well as your crypto results. And you couple that with the Accointing packages, which you're getting a discount here for $200 to get the calculation of all your results. And with the course, you can actually file a better tax return than H&R Block, TurboTax, Tax Act, or your local accountant is going to do for you. And all that is the software for doing your tax return is free. The course is free. You get a very affordable price here. Even normally you can get the full service package at Alex at Accointing. Their full pro plan is normally about $299. So this is a great price. I mean, you're going to be much less than having to pay a professional. And it's a great way to learn. And we, at the same time at Crypto Tax Audit, we offer a service where you can call up and speak to one of our professional crypto tax preparers and have them review your tax return after you've done it, and kind of like be a second opinion, a doctor's opinion. Say, did I do this right? Did I do this right? Before you do the filing. So this is a great, affordable approach for people. If they want to pay our company to do a tax return, it's typically about $2,000 plus the crypto results. So this is I think everybody should be able to learn how to do your taxes. And what we teach in this course is the same method we use on our own tax returns that we do professionally. So you can get a super exciting tax return, filing your Form 1040.
Yeah, makes sense. And we have one other comment here, and I want to use this as a pass the ball to Alex to show us a bit the platform, because it says, Laura says here, I have probably 5,000 transactions over 6 different exchanges using spot and leverage, barely any records. Irresponsible, I know. Any recommendations on where to start, please? So I would say start by using Accointing, the platform. So I would love, Alex, if in the last few minutes give us an overview, because I really love your platform and the user interface is so user friendly. And if you could share your screen and show us around for a bit before wrapping this up.
Absolutely. 1 second.
Okay.
You should see my screen now.
Yep.
Cool. Awesome. Yeah. So essentially, this is the Accointing platform. We also have an app, which is just for tracking. So essentially, when you come in for the first time, I've already imported some stuff here. But for the first time, you kind of get prompted to import your wallets or exchanges. Once you have those imported, you essentially get to the overview page, which here gives you your holdings. It gives you your net profits, all of your positions down here, and your loss or profit on those. And then down here, you can see your portfolio allocation. And here you can see kind of all of the different exchanges that you may have. So in terms of importing, like I said before, if you import something like Ethereum, you can essentially just import your public wallet address, right? We don't take any private keys. There's nothing that we can essentially do with that. All we do is we really read the information off of the blockchain. For the exchanges, for example, Binance, or I already imported a Binance, so that isn't going to work. But for a Kraken, you can import the API keys, and we show you how to actually get the API keys as well. And here again, it's read-only keys, meaning that we can actually access your accounts. Of course, all of these API keys, once you click on Save Connection, they are then encrypted, and so no one can actually access them. So security is a pretty high stand for us. Obviously, it's very, very hectic data. If we don't have an API, we may have the CSV file of the exchange, or you can always add things manually. And so manually, you can add them via the form, which essentially is pretty simple. You put in whether it's a deposit, a withdrawal, an order. An order is essentially a trade. You put in your date, the amount that you bought, the amount you sold, the currency, and then you just add it. And so what then happens is that you then have the wallets page where you have all of your information. And so here you can kind of see an overview of what really is in each of the wallets. If you have a ton of wallets, you may not even know where one of your coins is. And so this gives you quite a nice overview. And when you go to the full data set, this is kind of where really this accounting and this tax aspect comes in. You obviously have a ton of different transactions here, right? And so different transactions get taxed differently as well. And so, for example, here we have a deposit to Coinbase with a withdrawal from Binance, meaning that this was actually sent from Binance to Coinbase, right? And so we don't really want this. We need this to be linked so that the system knows that this Bitcoin or this 0.1 Bitcoin that was on Binance went to Coinbase. And why do we need that? We need that because obviously the holding period will be affected. And so if you move around coins, you don't want to lose that holding period. And so we can go ahead and classify this as an internal transaction, which is exactly what it is, right? It's staying within your ecosystem. It's not going anywhere else. You can approve this, and then you can let the system calculate, and then it will essentially show it as an internal transaction here. And so here you can do all of the classifications. So you can classify things as an airdrop, as the ICO, as interest paid, or as lending, or lost even, right? If you fell into a scam or whatever, you can classify them as lost. And so these are all the classifications that you will need to do in order to properly account for them. And then we have the holding period feature, which is exactly what Clinton had spoken to about, where we can kind of see, for example, this Ethereum here, this is the date, right? And so we can kind of see that on the 16th of April 2022, 50% of the Ethereum in this account, which are on the Ethereum wallet, will be long-term taxed rather than short-term. And so obviously if it was the 13th or the 12th, you wanted to sell your Ethereum, you could come in here and check, hey, does it make sense to sell now, or should I just wait a few days and then I'll just pay the long-term gains, right? And then from there, we also have this review step, which again, this is kind of the aspect of the problem of the data structure of crypto not being super clean. An example of a very crappy exchange in terms of record keeping is KuCoin, for example. And so there's obviously a bunch of different coins that we might not have, or prices might not even exist for. You may have, as said, those internal transactions that need to be classified as such, or you need to classify all of the different transactions. Or what also might happen is that there might be an exchange that hasn't properly given all the information, meaning that you might have missing funds, right? And so what does missing funds mean? Missing funds means that the system doesn't fully understand where the money came from that you traded with. And so, for example, Binance, sadly, via API, does not deliver credit card purchases, as an example. And so that means that you have to add those manually, and this is where you could go and see where the missing funds exist. So that's kind of a quick overview. We also have a performance page, which shows the unrealized gains and the realized gains in both dollar value and Bitcoin value. And then, of course, your number of transactions. In terms of the pricing of all of this, it depends on the amount of transactions that you have. So if we go here to the pricing page, we have the pricing here. So everything's completely free. You can import everything for free. You can use the app for free. You can use the web for free as well. The only thing you pay for is the report. And so like that, you don't have to kind of pay before seeing whether everything works. And so here, our cheapest up to 25 transactions is actually completely free. And then we, of course, have transactions up to 50,000 transactions. Sadly, currently, that is the limit. So if you have more than that, we sadly can't support it. And and these are the prices for the different levels of transactions that you have. So that's just a quick run through. If you have any questions, feel free to ask them.
There is a question which
Yep.
you mentioned as well about the private keys. We have Mike asking about how safe is accounting? Is there a chance of a hack and our funds get taken? Of course, no. But I would let you provide information about the security.
Yeah, exactly. So we don't have access to any of the funds. We only read the information of what is on these wallets or what is on the exchanges. And so because of that, there's nothing really that can happen with the funds, such as like if you are using an exchange and are worried that the exchange gets hacked, then obviously those funds can get taken. But with us, it's really just reading the information.
Makes sense. Okay, so at this point, I would like, before we wrap up, first of all, I would like to thank you for your time and the invaluable information you provided for US taxes, US crypto taxes. I would love if you have any final words. I will keep the one quote from Clinton that when it comes to crypto taxes, blockchain is not your friend. So guys, be mindful. File your taxes, keep your notes, use accounting and the service crypto tax audit as well. Please, Clinton and then Alex, if you have something to add before we wrap up. Clinton, you are on mute.
Thank you very much for those comments, Herc. I think you summarized it perfectly. And taxes are something we need to remind each other not to discourage people. And too many people out there thinking, I don't want to pay any taxes. I've worked hard to make this gain. Well, focus on how much you're keeping. taxes are a fact of life, as you started out saying, the unavoidable facts of life. Focus on what you're keeping and try to maximize how much you keep. Getting to zero tax is a foolish game. And the better thing to do is to focus on making long-term gains, report your taxes, and stay ahead of the tax man by staying clean and keep your money to pay your taxes at the end of the year.
Thank you, Clinton.
Yeah, thanks a lot for this.
Thank
also,
you,
of course, thanks to Clinton, always mind-blowing in terms of all the information there. But yeah, I think in terms of from our end, it's just always best to be prepared rather than kind of last minute try to scramble everything together. As we know, and people that are in crypto know, there's always something new that's going to come up, whether it's farming or an airdrop or whatever. And so if you have everything else record kept well, then you can always add in something new, right? And so yeah, just be prepared and don't scramble for the last minute.
Okay, yeah. So before we say goodbye, there is a last question, because this is the second time I see it. As someone else asked, should we go back and amend 2019 taxes to note small crypto transactions?
I'll take that question. That's a common question, and let's put it this way: that the U.S. operates on a voluntary tax system where you report your taxes honestly, and the IRS assumes that in order to keep people honest, they occasionally audit people. The fact of the matter is that almost immediately after we send in a tax return, we think about things we should have done differently, and everybody has little variations that you might have done differently, but we're not measured on perfect. We're measured on deviation, unreported income, and you get a percentage tax on that. So if you're not measured on perfect, it's not like a high school math test. Close is pretty good for the in this regards for the IRS. I will say this, that when you file an amended tax return for past years, you have to mail it in, and we're seeing an audit rate of between 5 to 10 times higher rate of audits on amended returns than on initially filed returns. And you have to really think, if I go back and, if I want to be, conscientious, should I amend a return to tell them about, $10,000 of crypto gains I had? Well, what's the tax on that $10,000? It's like $2,500. You might pay that much just to amend your tax return to mail it in, then to pay the extra $2,500 tax. Plus you're going to have late fees on that. Another strategy would be to use crypto tax audit to kind of watch those tax years. And then when you see the IRS flagging it for an audit, then spend the money after it to repair it? Why spend good money after bad? To be clear, if the IRS audits you and they come up with a different number, thinking you owe more taxes than what you reported, you have to pay that taxes. If the tax bill is more than $5,000, then there's a 20 to 40% accuracy penalty that kicks in plus interest. So there does get to be some penalties, but how much versus that, attracting an audit, just defending yourself against an audit might be $7,500 a year. So it's a risk that I think the IRS is overreacting to people trying to be honest, and they're auditing them. I had a guy who thought he could amend 17 and 18 just because he had paid his taxes on crypto. He amended them because he thought he could do it a little bit differently, get a little bit of money back. And instead of getting his money back, he got an audit letter for 17, 18, and 2019. He'll be years before he sees an amended for his money back. So it's a pickle that we're in. So what you could do is you watch the tax return and you're waiting for the statute of limitations, which is 3 years, to kick in so that you're no longer vulnerable. If it's really indeed, like you say, Laura, a small amount, then after 3 years, the only way they can go audit you after 3 years is if it's off by 25%. So, we just say, hey, watch it with crypto tax audit, fix it if you need to, wait for the statute of limitations to kick in, and then sleep well at night.
Crystal clear, and thank you for this.
Thanks, Bert.
So again, thank you very much for your time, guys. Click on the link in the description. We have an amazing giveaway, three free accounts in Accointing, and because we have a question about the secret code. The secret code has been given during this webinar. You can watch the replay after we finish and then find the secret code to unlock the giveaway. It will be open for 24 hours. Thank you very much, Clinton. Thank you, Alex. It was a pleasure. And Jay?
Yeah, just want to mention, you guys, I think this was a really important one. Go ahead and share it with your friends, link them to it, and also like and subscribe so that you can keep track of all the content that we're putting out during this 200K Congress, and all of the educational content and all the good things that we're doing here. So thank you everyone for joining the stream today. It's been a pleasure speaking with our guests here, and we'll see you all next time.
Great. Thank you very much, guys.
Thanks,
Thank
guys.
you.
See you.
Where's he?